Have you been on the fence about buying a home? Between inflation and higher mortgage rates than we've seen in at least recent history, who could blame you? Well, as terrible as the SVB financial collapse is for tech and the stock market, it could be the spark that reignites the fire of housing. Friday's big financial news brought fear, uncertainty, and thoughts of instability to the financial market. And crazy as it may seem, the response to those fears has indirectly impacted the housing market. On Friday, the Dow Jones closed down over 300 points, the worst week since June of 2022. The collapse of Silicon Valley Bank, the biggest bank failure since the global financial crisis of 2008, caused a sell-off for the stock market as regulators took control of SVB on Friday. That banking news dampened the February jobs report news that was also released on Friday, which is really a shame because the jobs report actually showed some sign of slowing inflation. Even with payrolls increasing more than expected, the smaller than expected wage gain captured the focus of investors. The hope is the lower wage gain may force the Fed to re-examine the game plan for additional aggressive rate hikes. In the wake of the stock market sell-off, investors turned to bonds. The sell-off and ensuing bond purchases resulted in the 10-year Treasury decreasing by 22 basis points. This is impacting mortgage rates with a decrease of about 30 basis points. As of March 13th, I received a rate sheet quoting an interest rate of 6.125% on a conventional 30-year fixed with an APR of 6.208%. What this means for housing is this. The SVB failure combined with the data from the February jobs report has changed the financial gurus' expectations about the upcoming Fed inflationary interventions. At this time last week, a majority of speculators believed the next Fed meeting would result in a 50 basis point increase. Those same speculators are now anticipating a 25 basis point increase, which at this point would be seen as an acknowledgement by the Fed that it may be time to reevaluate how these hikes, while intended to curb inflation, may be stressing other areas of the financial sector to a breaking point. Just this week, while on the PBD broadcast, Barry Habib, three-time recipient of the Crystal Ball Award for the most accurate real estate forecaster, said,
I believe that the Fed will more than likely have a difficult time hiking more than 0.25%. I think 0.5%'s off the table. I think maybe zero. I don't think they'll cut it this meeting, but I think that it'll either be a quarter or no move at all, maybe a pause just to see things settle down.
So if the trajectory of mortgage rates continues to decrease, we can expect pent-up buyer demand for homes to increase. If we do see an increase in demand, the hope is that it will be in conjunction with an increase in inventory. Inventory in Orange County is still very low, and even with the spring season fast approaching, lack of buyers and high mortgage rates are keeping some potential sellers on the fence about putting their homes on the market, just out of fear for either not being able to sell for the right price or not being able to find a home to buy. If an increase in demand doesn't come with an increase in inventory, take a guess what will happen to prices. The best case scenario for the Orange County housing market is that mortgage rates continue to decrease or at least stabilize. Mortgage volatility is a demand killer, and lower, more stable rates could be the spark that increases buyer demand and that reignites inventory onto the market. Anyone interested in buying or selling should be taking a look at what's happening in their market or the market they want to live in right now. Take a look at inventory levels, sales prices, days on market, and percentage of asking prices received. A qualified agent should be able to help you with the data so you can decide if an opportunity exists or if continuing to wait is more appropriate for your situation. If you got even an ounce of value out of this video, all I ask is that you hit the like button and come back for more.